We're going to say hello as this video kicks off here, this little live session. And we struggled. We had a very nice evening Sunday night. Nice little run up of about $450, pretty easy. Then we got started about 10:30, 10:45. We thought we could come out of some chop, and we didn't. We got caught in some chop for about an hour. We gave that back and then had about a $1,600 draw, which is kind of pressing the limits of what I want to see in any one trading session for a day. We suspended the trading program that we had for today, opted for a second one, and then got into a very nice trade. We were able to lock it in, a locked-in winner. We followed Swing Machine right in there, and we ended up leaving quite a bit of money on the table, but we ran it up. That one trade ran up about 28 to 2,900. We probably could have got another 1,000 out of it. In fact, we would have. Our profit target was 15,000, but we opted, had to catch up with a person, a newest member who is in our Q school at 2. So we opted to take that trade off the table, which is what we did. It cleared up the loss and put us in with 1250. So right now I've got to prepare the nightly video and see exactly where we are. We said last night that we thought we would see a little bit of a market bounce, and we're going to go through our paces and see what we see for our members. And in the meantime, we're running Swing Machine, and we're running it at a 5-minute level on the NQ, and we have what we call the dips and the rips set to true. So it's going to trade the dips and rips as they're presented if we're flat. And we also, I got to double check. I believe we're also have some profit targets in place. So it'll be more or less hands-free. We'll run that probably right through the evening session, right into tomorrow morning. If you want to learn more about who we are, what we're about, you're welcome to visit the website, send us your questions either in the chat or email, or if you still have questions after that and you want to give us a call, 9 a.m. to 9 p.m., 813-758-8263, and I'm happy to speak with you and try to answer some questions. We don't suggest, we live here in Florida. There's a lot of conventions in Orlando and whatnot, and I suppose I could do a tabletop display and have Swing Machine and so forth all set up. But trading in the markets isn't. We don't think it's for everyone. I don't. You got to be a rare bird. You really do. It's got to be something you really, really want to do. And that's, probably number one, because it's challenging. We're using robots to help manage our time but you need to have that acquired trading skill, and to get through the learning curve, it's got to be something you want to do. We try to expedite that, and need to have some discipline, certainly some patience, some risk capital, some time, and an aptitude, to work in and around a computer. You don't have to be a programmer, but if you do, that's fine. We do notice that the software folks, and we got quite a few now, they really, and I've grown to understand this, they very much have an eye for detail and an attention to detail, and they're very I don't want to stereotype, but they're pretty organized. They're pretty methodical, and I think that serves them well, and serves anyone else who's doing trading in the manner in which we're doing it very, very well. So again, I'm going to get off. We got to make the nightly video, see what we have, and see how it finished. We get into a situation now without even looking at a chart where we come down. We were down in the hole. We were near term oversold. We had a little bit of weakness this morning. We did put out a tweet at about 10 o'clock or so. I didn't get the opportunity to get the trade on myself, so it cost us a few grand. But we did tweet out that the market was trading at 43.80, and I thought that would be a really nice spot for some call options, to expire on Friday, some short dated call options. If folks took that trade, and there were folks that did, you're looking at a return of if it was on the SPX cash, probably 2 to 3 grand. And anyways, now as we come back up, we could drift higher tonight and even tomorrow morning, the next few days. But we're going to stop moving up into the no man's land. We have this big leg down, then we counter back up, and we could drift around up in here for a while. It would be best that we drift higher. Get on up there. We won't get, I don't think the S&P is at 4,400. Boy, I would give my eye teeth to get back up to, 40, 45, 50 or something like that, but I don't see it. I think we'd be lucky, and I'm bearish, if we could get back up to 4,500. That may sound strange, but I'd like to see us bounce up into that area. We'll map it out more specifically for our members, and then to be able to reload and get short again. But we may not, this thing could just fall apart. Short-term interest rates are now at historic highs, breaking well above 5%. That has never been a good thing. So we've been waiting on that, and it's kind of like the straw that breaks the camel's back. You just keep putting one more straw. If we go back and look at some of the more significant crashes in the last 23 years, the dot-com, the 08, and even some of the other more significant pullbacks, they were all brought upon, in our view, short-term interest rates. The crashes were with the short-term rate getting above 5. So we are very much on borrowed time. Now, I'm not, I don't think the 20-year and the 30-year interest rates are going to rise much more. I think they're actually going to come down. And in a flight to safety, it'll be credit tightening. So if you're looking at something like the TLT, which is a 20-year kind of tracker for the treasuries, I'm thinking that is going to bounce over the next few months, but we shall see. We're traders. We're not investors right now. We will invest, Susan and I, when we see the whites of their eyes. And we're a long way from that for us. So near term, we're going to stay with our knitting, which is trading futures intraday because they're highly liquid, exploiting the market. Sorry, that's what we do. Provide some liquidity. It isn't without risk, so we're serving a function, and going out 35 to 45 days, we're usually using options, put credit spreads, call credit spreads, debit spreads occasionally, single put and call options, usually defined risk. And we have a tool that helps us select the stocks and the structure that we need. When it comes to options, you have to get the direction right. You've got to get the timing right, and you got to get the implied volatility right. So it's a high bar. Can be done. It just takes, I think, it does most certainly take longer to learn because they take so long to play out, right? We can trade intraday, a little strategy, 2, 3, 4, 5 days. You're going to have a pretty good idea what you can and cannot do with it. But with options, it's going to take weeks or months for a particular approach to play out. Any questions, feel free to pop them in the chat, and I'll try to periodically look. Otherwise, enjoy the show. Right now, market's a little bit soft. Boy, they were squeezing them right into the close, and we'll see what we're going to do here tonight.